All right. Okay, so while Emma is getting the slideshow up, I will welcome everybody. Thanks for joining. Um, Steph Adams is our expert renovation loan specialist. She has done thousands of these types of mortgage loans, and she knows them inside and out. I'll give you a quick little background on her. She's been a renovation loan specialist since 2006. Um, she's involved in her local community, and she has a passion for historic preservation. So that kind of goes hand in hand with all of these renovation type programs that she does. She actually is in Cincinnati, grew up in Cincinnati, graduated from the University of Cincinnati, where she got her bachelor's degree in finance and accounting. And she is a collegiate basketball player. So Steph has a ton going on. She lives in Cincinnati with her wife and 5 kids, holy smoke, and 2 dogs. So she is just an absolute expert. I am so thrilled that she is going to share some of her time and knowledge with us. I think that everybody will benefit from knowing about these type of programs. Steph will go into it a little bit, but one of the things that was on my mind when I asked her to do this is I think we're going to start, as we have already, seeing a lot more foreclosed homes come on the market. And as an agent, just understanding that you can show these properties to your buyers and having the knowledge of different types of loan programs. Like if you have a veteran or a first-time home buyer, I know sometimes you might shy away from showing them a home that you don't think would pass an FHA or a VA or a USDA inspection. So this just kind of opens up a lot more opportunity for you to maybe show, especially with the low inventory we have. I feel like it just opens up a lot more options for you to show more homes to your buyers. And then Steph has a real interesting take on it from a listing perspective as well, that I had not given that a lot of thought to. So when she and I were talking earlier, I found that to be real interesting. So to not take up any more of your time, Steph, I'll kind of let you take over. If anybody has any questions, put them in the chat and Steph can follow up on them. Probably throughout her presentation, she'll probably end up answering most of your questions. But if there's something, you have a specific scenario, or you just have a question she didn't answer, put it in the chat and we'll make sure and follow up with it before the end of the webinar. All right, I'll let you take it, Steph.
All right, thank you.
You bet.
Thank you all for joining us today. I appreciate Stephanie putting this together. And Emma, thank you. So Emma, this is kind of a quick highlight here. Again, you see Stephanie and my faces here in contact info. Kind of some things we're going to talk about. Obviously, the steps to a perfect renovation loan, processing timeline, repair checklist. So that's something great. And again, any of this information we can definitely share with you. We've got some flyers as well that if you'd like those, they'll be good. But the repair checklist, that's something that seems to come up a lot. A lot of people say, well, you know, what should we be looking for to be right or be wrong with the property when we're looking at it? Not only buyers, but obviously agents as well. So that's something that I'm always like, hey, screenshot this, save it as a favorite on your phone. You know, when you're walking through properties with clients, you know, it's kind of good to know. It might be something that, again, people don't think is a big deal. You might not think it's a big deal. They might not think it's a big deal, but, you know, the appraiser and or potentially underwriter might think it is. So that's definitely a good one. One of my favorite ones to share there. And then we're going to talk a little bit more about the different options that we have as far as renovation financing goes, from FHA, VA, conventional, USDA, et cetera. So that's kind of a quick overview on what we'll be talking about. Emma, if you'd like to get perfect. So of course, the steps to a perfect renovation loan, very similar to a regular loan. Obviously, getting pre-approved is essential. That way we really know, what we're working with. And just so you guys know as well, the process would be that you would still have your buyer contact Stephanie and Emma to get pre-approved. That way, everything's done the way that you're used to it there. And then when they find that property, if it needs renovation, I will get looped in right away and kind of walk through that process as well. But that's often what happens. They find that property. They may not be looking for the renovation loan, particular property, but they come across one. And again, there's something to be mindful about. This does not have to be a full gut rehab, doesn't have to be anything majorly crazy. Maybe really the kitchen just was done in 1992 and they want to update the kitchen. It can be that simple. So, don't overthink it. A lot of people will send me, listings like, hey, is this one that can go reno? Is this, something like that? And again, 99% of the time, the answer is going to be yes. Yes, it can. So, and we don't shy away from if there's mold or if there's no roof or if there's foundation issues. All of those things are definitely things that we can do and fix with the renovation loan to help the buyer get into that house. So when you write the purchase contract, a couple things about that. So let's just say, for example, that Stephanie has pre-approved them for $100,000. I like to use easy round numbers. It makes math pretty easy for most people. So what that means is if they're pre-approved for $100,000, they could buy a house for $80,000 and then borrow an additional $20,000 to renovate it all in one loan, right? So their total acquisition cost is going to be that $100,000. Their down payment then is going to be based off of that $100,000. So FHA 3.5% down of the 100,000. So then in turn, we lend them that 96.5, if you will. So again, all one loan. Okay. And with the offer, I tell people, you'll want to check if it's an FHA loan, you can still check FHA, and then just go ahead and put in there that they're doing the FHA 203K renovation loan. If it's conventional, check conventional, and then you can put, conventional renovation loan. We'll kind of touch on these. There's a couple different names between, Fannie Mae and Freddie Mac. They have different calls for those renovation loans. But again, that's something that'll be, that can be on the pre-approval if you want it to be, so you know exactly how to write it. That can be obviously discussed with me. I'll make sure that you guys have the right information to put it in there. But something that's different, once we have that accepted offer, typically on a regular transaction, you're going to have your home inspector go out and do a home inspection. I'd say the time frame is still going to be roughly the same. And again, anyone feel free to, throw out an answer, but I'm not sure, how long are you guys typically writing your inspection timeframes for right now? Like 7 to 10 days, probably. Does that sound about right? Maybe.
Yeah, I would say most of them I see. Yeah, you allow 7 to 10 days for the home inspection.
Right. Okay. So really, that's the same time frame that we'd be asking for this HUD consultant, the renovation consultant, to come in. I typically we don't require that they have a regular home inspection and the HUD consultant come out. And I'll use that phrase, HUD consultant and or renovation consultant. Those are kind of interchangeable. Bottom line, it's a third-party consultant that is assisting us with the renovation loan. But the HUD consultant, the one that I use that would also come out to visit your guys' area as well, he charges $400. That gets paid just like a home inspection would at the time of inspection. He's not going to be out there for 3 hours. He's probably going to be out there for about an hour and a half. He's still looking at 36 different inspection points. The bottom line of the whole goal from him right at the beginning is to tell us why the property in its current condition does not meet minimum property standards. Okay, so this is a required repair, this is a required repair. And then also he's going to give a ballpark cost of what a general contractor may charge to do that work. I had a situation recently where talking to the borrower, she thought, yeah, I think, $30,000 should be enough. The agents, both agents, the listing agent and the buyer agent, thought, okay, yeah, sure, that sounds about right. When the HUD consultant went out, he got back to us and he, showed me the report and called me and said, hey, look, I mean, it's 40 to 45 easily. The nice thing about having that step, and again, same thing as a home inspection, before you get to spending more money on the appraisal and even further along in the contract, it's kind of another touch or another potential negotiation point where, maybe that happens where we assumed it was 20,000 or 30,000. And then, the HUD consultant comes back and says, hey, it's probably going to be closer to 40 or 45. If we're already pushing, debt to income ratios at that point, I definitely still think it's worthwhile to get a contractor to still give a bid, because that's the person that ultimately is going to be doing the work. And ultimately that's the number that we're going to be using when it comes to the loan. But that may be something, if we're way off on that, that may be a point where we say, okay, hey, maybe this particular situation, we need to move on. And or again, maybe renegotiate, on the purchase price or something else. Okay, so, but again, once we have that, I call that point where the HUD consultant does a feasibility study. I call that, kind of like the blueprint of what we need in order to have the contractor give us a bid. So the contractor, okay, a couple things about that. The contractor can be, the buyer can pick their contractor. Okay, we don't say, hey, you have to use this person. We don't need 3 different bids. They can pick their own general contractor. There are a few stipulations with that because of identity of interest or conflict of interest. So it can't be you, the realtor. It can't be me, anyone involved in the transaction. It can't be us or really anyone related to us. So again, in this situation I mentioned earlier, the realtor her husband was a contractor, and she was like, hey, he went out and he bid it, and yeah, he agreed with the HUD consultant, like he came in at about 43,000. I was like, that's great, but your husband, can't be the contractor on the transaction. He would have to have maybe a subcontractor that he knows or what have you be the contractor for the transaction. So that's something that always is a question, who can and can't be the contractor. There are some exceptions to the rule as far as if it potentially could be the buyer themselves, if indeed that is what they do for a trade, for a living, and that's how we're pre-approving them. That potentially is an option for them to be, the general contractor, or if they're an HVAC contractor and, the property needs a new HVAC system, that they can install that themselves without having to pay someone else labor and material cost to do that. On those types of transactions or situations, again, we would not be able to set aside labor costs. It would just be material cost. But again, they can pick their own contractor. Contractors have to, in the state of Ohio, they don't have to be licensed. There's not a licensing per se for a general contractor. However, anything that governs the local municipality of the property. I know here in Greater Cincinnati and Northern Kentucky, if they're in the city limits, they have to be registered with the city of Cincinnati as a contractor. And that really kind of comes back to the almighty dollar, right? That the city wants some tax money from that business that's doing business in their city. So other than that, though, they do have to have liability insurance. If they have employees, not subcontractors, but employees, they have to have workman's comp. We do vet them. So we ask for 3 customer references that they've done work for in the past year. And we also ask for 3 either suppliers and or subcontractors that they've done work for, again, within the past year. And we do reach out to them and, make sure that they are on the up and up and that they have done right, if you will, by those people. It's not an extremely strenuous process, but it is definitely something that, we want to make sure that we do. Lots of checks and balances through this whole process, not only with that HUD consultant, but also with the contractor. So once we have a bid that everyone's happy with, meaning that, price wise, it's broken down the way we need it, that it's addressing all the things that we believe that we need to address at the time and or want to address, then we can order the appraisal. So, and let me take one step back. So people ask all the time, what's the, and I mentioned this about the writing the offer, how long does this take? How long does this, loan take to get closed? I would 100% suggest writing it for 60 days, 45 definitely, but if I would push for 60 from the get-go. Right now, our average turn time is about 53 days to have from the time they have an accepted offer until we get closed. One of the big caveats about this contractor bid is once we receive that bid, it takes about 30 days before we can get closed on a loan. Once we have a bid, then we can order the appraisal. The appraiser is going to take the purchase contract, and I'll go back to my example from earlier for 80,000 in that contractor's bid for 20, go out to the property and say, okay, once this property is improved based upon the bid provided, it's going to do 2 things. 1, it's going to be worth at least $100,000. 2, it's going to then meet or exceed minimum property standards. So all those problems, if you will, that the HUD consultant found, or that maybe you even noticed, that were wrong with the property, the peeling paint or the mold, those types of things. that bid is going to cure those things. So even though it's not done before we close on the loan, we know that it's an after improved value, and that once those things are done, the property will meet or exceed minimum standards. So that's really what allows us to be able to close the loan and get this done. So once the appraisal is ordered, obviously, the loan's in underwriting at that point. The appraisal comes back. We've got title work. We've got the contractor vetting back. The underwriter looks at everything and says, yes, this all looks great. Then we get final approval. We can set the closing. Once we close on the loan, guess what? That's when the seller can get paid, and that's when you as agents get paid. So that's obviously a good day. But once the renovation loan closes, that's actually when the renovations actually can begin. So the renovations need to start within 30 days of the loan closing, can't stop more than 30 days at a time. And depending upon the type of loan that they're doing, I mean, again, VA, FHA, the limited, the standard, or the conventional renovation, they have up to 6 months to have that work completed. There is a draw process, and I'll talk a little bit more about that, again, because the draw process works a little bit differently with the different types of loans that we have. As you can see in number 9 here, it says renovation begins in up to 5 draws. And again, that's kind of what I'll talk about here in a little bit. And then again, on most of the loans, there is some sort of a final inspection that is done to verify that all work has indeed been completed, and that from that list and or from that bid, so that everything can be wrapped up with a bow. I will say this: if they were to close today, just like on any other loan, they'll pay interest through the end of the month, and then their first payment wouldn't be due until June 1st. Depending upon the type of loan that they're doing, for the standard 203K and both of the conventional renovation products, they can actually roll in up to 6 months of mortgage payments into the loan. The benefit of that would be is if they're paying rent currently, and or if they have a current housing payment, mortgage payment, maybe they qualify without having to sell their current home, which is a great position for them to be in because they don't want to live in a renovation project. They could roll in up to 6 months of mortgage payments into that new loan. So in that case, really, June, July, August, September, October, and November will be paid for. So they would then have to start paying come December 1st. Emma, you can go ahead and go to the next slide, please. And again, the process timeline kind of goes back through, in a little more specifics, if you will, and or in written form versus me speaking about it. Week 1, what we're looking for, week 2, and really this one is actually, this is a shorter time frame. This is more of a 45-day time frame versus that 60-day. But it's definitely something that, again, is good to know, and we're happy to, share this processing timeline with you all. Again, you can click to the next slide as well now, Emma, so we can just see that. As you can see, this is the stuff that I've kind of already touched on there. Yes, there you go. So this is that checklist I was talking about. Again, a lot of people always wonder, what are things? And I'll be honest, I'm oftentimes shocked, when people call me and they say, oh, we accepted a regular conventional loan on this, and the appraisal came back and there were problems, and then you see, all the damage that's there. Just because someone's doing a conventional loan doesn't mean that there's still not livability issues and or minimum property standards that exist. So, but also having said that, don't turn down a listing, or definitely do not put things like this property won't fly FHA, or cash only, things like that. One of the best things I think you can do is try to be more inclusive and give people options if there are problems for that property, which one would be, putting renovation financing, renovation lending allowed or available, something like that. But these are all things that, again, an appraiser is going to be looking for. If there's water stains on the ceiling, and or maybe there's some mold or some bubbling of paint, things like that, that's going to raise an eyebrow, and we're going to want to know why is that an issue? Has that problem been fixed? and et cetera. So again, when that HUD consultant or renovation consultant comes out, they're going to be looking at those things. None of the consultants that I'm talking about, the third-party renovation consultants, they're going to do the same thing a regular home inspector would, that if there are structural issues, they're going to say you need to contact the structural engineer, and things like that. So it's not like they're going to, do it all. They will still need to reference out for certain things like that. And let's see. All right. Yeah, that's perfect. First of all, I'll go ahead and open it up real fast here. Does anyone have questions off the bat? I know it's kind of high level here for everyone, but I just thought I'd see if anybody had any questions right now.
Hey, Steph, can you allude to, so one of the questions I think people ask sometimes is a consultant required if it's a conventional renovation loan, or is the consultant only required on FHA?
That is a great question. So the on conventional, depending upon the amount of renovations that are being done, that's actually true on any of them. So there's let me talk about this real fast. So FHA, you've got the limited 203K, and then you've got the standard 203K. The limited, there's no minimum amount of repairs, but there's a cap on repairs. And the cap of repairs, it actually will say the max renovation amount. That max renovation amount is not just the contractor's bid. There are other fees that are involved in that. There's a contingency reserve. I usually use 15%. I mean, the guideline typically is 10 to 20, but if any utility is off, the underwriter is going to make it a mandatory 15%. And Stephanie, as you alluded to earlier, we are going to start to see more foreclosures back on the market. So that's something typically on foreclosures and or properties that have been sitting for a while, and or even full gut rehabs. They may not have a utility, connected at all. There might not even be an electric panel, or the water's been off, or what have you. So on things like that, we're going to use a 15% contingency. So that's just my norm, is to use that. So there's no minimum on the limited, but there is a cap on the renovation amount of $35,000. And so on the limited, technically, you do not have to have a HUD consultant or a renovation consultant involved. I believe the path of least resistance is to always have that consultant involved. I mean, more than likely, they're going to have a home inspection done. And I like to say, in lieu of spending that money, if you know you're going to be doing a renovation loan, spend that money on the HUD consultant so we know what we're dealing with. It's almost like a pre-appraisal of, these are the issues that we have to address right now. And so that's my 2 cents. Again, in my experience, that seems to be the path of least resistance. On the standard 203K, so there's a minimum amount of repairs of $5,000 on that. You can do structural repairs on the standard 203K, where on the limited you cannot. So if there's anything structural, so let's say you don't have the HUD consultant come out, and you just have a regular home inspector, and then we get the termite inspection back. Well, and there happens to be termite damage. Maybe there was only $10,000, $15,000 of work that they needed to do, but if there's termite damage and there has to be a joist that has to be replaced, or even potentially shored up, like the scabbed onto, that is going to make it now a standard 203K because it's structural. And now you have a mandatory implementation of having that HUD consultant. So they've already spent the money on the home inspector, and now they have to go spend the money on the HUD consultant as well. So the standard does require it, and both the conventional renovation products do require the HUD consultant as well. So again, path of least resistance is just to have that person involved from the get-go.
Perfect. Thanks.
Yeah. So this is some of the things I was actually kind of just talking about. It's going to let you know, hey, how many contractors can they have? Again, path of least resistance is to have one general contractor bid the whole thing, because we do have to vet all contractors. And I have had, we've got a general, if you will, then you've got an HVAC contractor and then a plumber. and both the other two have been vetted, but we're waiting on the plumber for some reason. And unfortunately, those are pitfalls that can hold up closing, that can hold up getting final loan approval. So not to say you can't do it. I understand why people want to have a couple different pieces in there so that it's a little bit cheaper for them. But this slide here does kind of explain, you can have one general contractor or two specialty contractors on the standard 203K. And something like that, usually I'd say is more, again, if you have foundation repairs that need to be done, that might be a specific company that's going to do that. And then the general contractor would take care of everything else. So something else I mentioned to Stephanie before everyone else hopped on, predominantly the guidelines are the same for FHA loans and FHA 203K loans as far as credit score, down payment. Obviously all FHA loans are owner occupant loans only. And we do finance single families up to four units for the FHA 203K product. We also can do mixed use properties for the FHA loans. So let's say it's a 3-story building. The top 2 stories are units, living units, and then the first floor is commercial space. So that's really a 3-unit property. We can do that. However, the renovation funds cannot be used at all for the commercial space. So what that means is, that space then would have to meet minimum property standards on the inside. The entire exterior could be included as just the residential, if you will, because it's the entire building, but the inside of the commercial would have to meet minimum standards in its current condition. And then on the conventional renovation loans, we can do investment purchases, investment properties, but we only do single family investment property purchases. So that is definitely something to be mindful of. And realistically there, again, even though guidelines may state that we can do 15% down, we're really talking more of probably more 20% down on the investment property purchase and renovate loan for conventional financing. VA renovation is a great product as well. Unfortunately, it's relatively underutilized. It's not a perfect renovation loan as far as I'm concerned, but it is a great opportunity for people to still get in with 0 down. Unfortunately, there's just extra time frames. So something like that, you're going to be talking more 75 to 90 days. Again, we are, at that point to an extent, dependent upon